Hey everybody, welcome to the weekly wrap-up. It's February 28th through March 4th, and I want to thank everybody for watching. It's Lee Goldstein, the trading director at 10 Minute Trades, and this is our podcast. We're in beta, so relax and I'll go over the week's events. This was a challenging week. The war in Ukraine is creating markets that are sort of ignoring news events. So what we're seeing is there'll be an important news event, but there won't be a proper expected reaction like we're used to. And we went through this at the beginning of the pandemic, and it's not like we're being caught completely flat-footed, but it does take some time to readjust and to fix things. And, I had a difficult week, but also there was some decisions I made that probably could have been better and would have allowed us to have made quite a bit more money. So, I don't get yelled at. I'm responsible for the trade room, the moderating, and all the trades. Ultimately, it's my decision because I'm the one risking the money. And I'm perfectly happy to admit when I'm wrong and to go over why I was wrong because the key is to take the mistakes you make and moving forward, create a more successful outcome the next time. So let me go over the main reports that we traded this week, the events that took place on those reports, and we'll discuss what happened. And that's the idea of the podcast. So let me get going. So the week started out with Sunday evening, there was Australia's retail sales. I didn't really expect it to do anything, and it didn't. It wouldn't have been tradable, and we had no daily trade report for it, and we really had no plans to trade it. I was just watching that report to see if it moves, because the idea is let's see if it moves this month, and maybe we'll trade it next month. And it really didn't do anything, so not planning on trading Australia retail sales next month either. Now, something to understand about that report. That was the interim Australia retail sales. So we'll look more closely in a few weeks. There will be the main report, which is really the impactful retail news for Australia. So I wouldn't put too much credence into what happened Sunday evening on Australia's retail sales. It didn't move, but again, it was the interim report. I didn't really expect it to. Monday evening, we had China's manufacturing and their non-manufacturing report, and also the Caixin manufacturing report, both the same evening, which happens. They're very similar reports. They gauge, obviously, the manufacturing activity that's going on in China. And the first report, the manufacturing, non-manufacturing, would not have worked as a trade. It just didn't really move very well. It moved up and down, and it would have been a stop out. And then the Kaishin report was a winning trade if you had taken the trade. Very small movers, so neither of them did very much in terms of activity. The report that I really thought would be a big mover was that evening, same evening, Monday at 10:30 p.m. Eastern Time, was the Australia rate statement. I thought that was going to be a big moving report, and it really didn't have very much impact. So that'll happen. We'll still keep an eye on Australia. It will still keep trading the Chinese manufacturing news, knowing that they are small. And we'll go forward from here on those particular reports. Tuesday morning at 4:30 in the morning, we were watching the British manufacturing report, and that did not have very much of an impact. We had a trade room for Canada's GDP. That has been in the past a very good moving event, and we're trying to see it has been responding better over the past year, 6 months or so, than it had been because we had put that report actually on the bench. We weren't trading it for a while, and it seemed to have come back. As I was getting ready to cancel the trade, I got filled at the exact same second I was canceling due to not much of a response. And unfortunately, that fill caused a small loss. So that was a shame. And then the same Tuesday, that was March 1st, we had final manufacturing and ISM manufacturing. Final manufacturing, we've been testing and we've added a range trade to that report, and it hit the first target on the NQ and reversed really quickly. It reversed so fast you didn't have an opportunity to get out and take your profit. on that first target. That's how volatile these markets have been due to the war in the Ukraine that's going on. Now, there was something I might have been able to do to protect that profit, or at least part of it. I don't think there was a way to save that report's profit ultimately because the reversal was in a nanosecond. But there are tools in our software, a couple of different ones that allow you to move the stop if a certain amount of ticks are moving in the trade event. So in other words, if an event moves 20 ticks, you can move your stop to break even. There's also a feature where if your first target is hit, you can move your stop to break even plus a certain amount of ticks. And that's very easy to program into our software. Now, possibly if I had thought that it was going to be such a fast moving reversal, I could have programmed the stop to move after the target was hit or after a certain amount of ticks moved in the event. Unfortunately, I didn't, so I did get stopped after my first target was hit. But it's important to know that there are tools that you can use if your first or second target gets hit, and that's possible to do that in the software. Now, the ISM manufacturing report, normally we trade that as a breakout. 4 of the last 6 months have worked as a breakout, but these markets are challenging, and here's the frustration. I decided even though in the trade room, I started the room off by saying, you know what, look at the DMM, probably should do this as a trap trade. A trap trade is a second strategy that we have that you can download when you subscribe to our software. And it's a specialized reversal trade. And the DMM, our daily trade report, had mentioned quick reversals in the ISM report over the past 6 months. But because the report was 4 out of 6 profitable on the breakout, and honestly, the DNA of our company is breakouts first. We usually opt for those first. Then we look for a secondary setup. So I went for the breakout. Unfortunately, it didn't work, and the trap trade was perfect. It would have been great. But that lesson I was able to bring forward, which I'll get to in a few minutes. Now, on Tuesday as well, oil had been moving dramatically, obviously because of the world crisis. We came to our afternoon API report and we had a setup, our normal setup. It's usually a pretty quiet time of the day to trade oil. I really don't, I think this was a decision that if I could have it back, I would definitely take it back. And I probably should have increased the stop. In other words, I should have been willing to take on a little bit more risk to trade the API report. And wouldn't you know it, I got stopped out to the tick on our trade. Had I increased the stop just by one tick from 13 to 14 or 13 to 15, it would have been a hundreds and hundreds of dollars profitable trade. But instead, I got stopped. And I can tell you that's a very, very frustrating event to live with all week. Even being a professional trader, things still bother me. And that trade, it bothered me. And I thought about it all week, and I did increase my stops quite a bit during the week, and it was the wise decision to make. So the API report, it got me because my stop was too conservative. Too bad, right? Now, that same evening, we had the Australia GDP, which is a quarterly report. That is a family money trade, not a monster mover. And it really didn't move that much. We were able to grab a couple of ticks, made a few dollars on it, and we'll keep that moving forward. It's quarterly, like I said. We'll trade it again next quarter as a family money trade. It's not a very high risk trade. Australia's dollar future is only $5 a tick, the 6A. And that report does have potential to move well, especially because it looks at price kind of data. GDP, how much is the economy growing? So we'll trade that Australia report pretty regularly now. Now, Wednesday was an interesting day. It started early in the trade room, 7:45 a.m. Eastern Time, with one of my favorite reports, the ADP payroll report. That's been a prime trade. It's moved into a family money trade. That's a trade I would trade my family's money on every day of the week. Now, the most unusual thing happened that I've never seen happen on that report this week. The news was late. It's a 10-second cancellation normally on our daily trade report. I would never cancel that report no matter what. I would wait for the news to come out, and after 10 seconds, no news. 15 seconds, no news. 17 seconds, the news comes out. That report almost always pops or drops dramatically on the news. We got filled instantly, and then the price just dropped dead. It stopped right where it was, and it sat right where it was, and I controlled and shrunk my stop so I didn't get taken out with a full loss. I thought it was going to reverse because normally when you get filled and price stops, it very often changes direction. So it'll fill you to the downside, stop, and then go to the upside and give you a losing trade. That was my concern. I had quite a few contracts on and I was risking quite a bit of money. So I was being careful. The news came out late. The price didn't move. I shrunk my stop. I shrunk my targets, got out with a decent profit, almost $150. I think it was 140 to be exact. And then for some reason, the price just kept bursting down. There was no way to know that it would be that strange of a move. We had a decent little profit on the report, and it was a well managed trade. You know, I talk about how sometimes I make bad decisions. Well, look, even though you don't always make the most money that you could have, you still might have managed a trade really well. And I felt that the ADP report was managed well as a trade, and it was profitable. Crude oil inventories, they were not in my plan to trade, and I did not trade them. It would have been a losing trade. It was not a good reaction to the crude oil report, and that's to be expected with the price of oil, spiking as much as it has this week. What happens is you have such a big move in the price of the index, in the index price that represents the price of oil. So let's say you have a really big move to the upside. And if there's a report, the storage report comes out, and it would normally push the price up because oil has moved up so much, it might struggle to continue moving up. So you would not normally get the expected result. So trading oil today was not in my plan, and it was a wise decision. The beige book was a decision I'd love to have back. Before the beige book came out, the beige book is a Fed report. You know, they have these Fed colored reports, they call them the beige book, and you have the red book, and they generally talk about economic activity in certain areas of the country. The beige book is one of those reports that we trade it comes out 8 times a year. So it's not quite monthly. And it's been a good breakout trade setup. But I made a mistake in judgment. And my judgment mistake was this. Chairman Powell of the Fed was speaking right before the report came out. So there was so much dramatic movement in the index we were trading before the report that when the beige book was released, there was not a very good response. So I should have passed on that report. And there was a better secondary response. In other words, after the news was released, there was a test of the high of the day by the NQ. I call that a magnet trade when an index wants to test its high or low that hasn't been tested recently. That's a magnet. That high or that low often pulls the index into that price, and it's a good trade to take. And that's what happened after the news. Any kind of bank rate statement or interest rate report or Fed report, they're very good to trade after the event takes place. And usually it can be just a few seconds up to a minute or so, because often a trend will develop after the report is released, like an FOMC statement or minutes. So keep that in mind. You can trade after the news on those reports. And we're going over those types of trades more and more as time goes on in the trade room. Thursday, there's an 8:30 unemployment claims report that we'd like to trade it right now when it's trading with other bigger news. In other words, GDP or retail sales. Then I like to trade the unemployment numbers that come out on Thursday. I'm not that interested in trading them when they trade by themselves right now because the report is not moving the NQ that well, and that's the instrument we're trading right now. We've moved off of gold on that report, and we're trying to move off of gold on as many reports as possible because it's challenged right now. It's got bad liquidity, lots of whipsaws, and we're looking for alternatives. But that Thursday unemployment claims, we did not trade it or have a trade room for it. And we had final services, which is a report that about 99% of the time it comes out before ISM services, 15 minutes. We were using that report this week to give us an idea if the breakout with gold might work on the next day's jobs report. We were looking to see if final services had a normal reaction to the news with a gold breakout. And it really didn't look that great. It was okay. It was a decent reaction. Not enough to scare us off of trading the jobs report Friday, but it wasn't the greatest breakout trade. But it gave us at least a little bit of an indication that the breakout, it was somewhere in the middle. It looked like it might be okay. It wasn't, the best that we have ever seen, but it also, we were looking even more importantly to see if it was giving us an idea of how to trade 15 minutes later ISM services. Now, remember in the beginning of the week, ISM manufacturing, I decided not to trade the trap trade. They're very similar reports, just that usually ISM services historically hasn't moved as much as the manufacturing version of the report. But that's reversed over the past 4 or 5 months, where the services report's been moving much larger. So in the back of my mind, I was a little bit concerned that if I trade services as a trap trade, it might explode through our stops. The enemy of a trap trade is a large move in one direction. That's the love of a breakout trade. However, I knew in my heart that the trap would be really good because gold's been moving up and down. A specialized reversal trade would work, in my opinion, and that's the trade I took. I took a trap trade on ISM services. It worked beautiful. We had a very, very strong profit on that report. And here's the interesting part, the trap trade looked like it worked as well. I said the trap trade. It looked like the breakout trade worked as well. So you could have traded the breakout and or the trap trade. And then the final trade on Thursday was natural gas. Natural gas had a really strange reaction the minute the news came out. It kind of jerked up and down, and depending on how you got filled, it could have been a loser or a winner. And that happens with natural gas. Sometimes, if you're not live trading natural gas, you don't know the true outcome because there could be weird slippage, weird movement, strange fills because it moves the market so fast. So some people could have had a winner, some people could have had a loser on the natural gas breakout. We have a 3 minute after the trade on natural gas that's been working great. And even in these volatile markets, it worked beautifully on natural gas on Thursday. So the 3 minute after the news trade looked great on natural gas. And that brings us to Friday's jobs report. Friday's jobs report has three possible setups that we're currently looking at: the euro breakout, bonds ZN breakout, and gold breakout. When we got into the trade room, and I got into the room early to watch the markets on Friday, the markets, even with the war in the Ukraine, the markets were quite calm. Gold was looked very manageable. The bonds were very manageable, meaning they weren't that volatile. There wasn't these gigantic moves before the jobs report. I felt completely comfortable trading our normal setup for the jobs report. And I traded the gold breakout. There's no way to know, nothing you can do to prevent when a whipsaw occurs. And a whipsaw is when the index moves up and down rapidly, filling you in one direction and then immediately stopping you out in the opposite direction. The euro didn't work. The gold didn't work. The bonds whipsawed. Everything whipsawed that we were interested in trading, and it was really a miserable trade because of that. There also wasn't that great of a secondary trade after the report for me. Um, One of the partners in our company was trading gold as a secondary report and was able to grab some profit trading a quick reversal on gold. It was actually bonds that had a great after the news trade, and I was actually looking for gold for my after the news trade, so I wasn't planning on trading bonds after the news. Obviously, you can't always know which index is going to be the perfect index, but we have been noticing that the ES and the NQ are starting to move much, much better on the US jobs report in a tradable fashion. So we're looking for a range trade going forward next month for the ES and for the NQ for US jobs as a secondary index to trade. We'd like to have those one, either the ES or the NQ in our pocket as an additional choice on the bonds report. So that was the week this week. It was challenging. You can't get down if you have difficult weeks, especially if there's a war going on. Events in the world are making news trading a little bit complicated right now, but that just means we'll look for other setups. We'll do extra testing, and going forward, we've had a lot of new setups, and we're going to be trading some of them next week. So sit tight and relax and have faith the system works, and just realize that we are not sitting tight and doing nothing if there's difficult trading. We're always looking for new setups, we're always testing, and we'll find better ways going forward to trade. So I hope you enjoyed this wrap up. I'm Lee Goldstein, the trading director at 10 Minute Trades. Thanks for watching, and I'll see you in the trade room.